While everyone's panicking about inflation thanks to worrying CPI numbers, one investor has already made his move. Not with a flashy press release or headline-grabbing trade, but quietly behind the scenes in a way most investors completely miss. So in this video, I'm going to show you how Warren Buffett is positioning Berkshire Hathaway for long-term inflation protection, and more importantly, how you can learn from what he's doing to build a portfolio that not only survives inflation, but thrives through it. Buffett has been quietly buying up Occidental Petroleum since 2022 and now owns over 28% of the company, worth over $12 billion. Why is he doing it? Well, Oxy is a classic hard asset play. It produces something real, oil, which tends to rise in price during inflationary periods. In fact, if you look at his top 6 holdings, 2 of them are energy plays. Buffett clearly knows what's coming. Occidental Petroleum share price may not have wowed onlookers, but just wait and see, because the energy company does sit on enormous reserves, enjoys tremendous pricing power, and holds a key position in U.S. energy independence. It seems clear that Buffett is using Oxy to hedge against long-term dollar devaluation and rising input costs across the economy. What's the big takeaway? Buffett seems to have concluded that Oxy will have long-term pricing power. He famously expresses his view that a business which can hike prices without worrying about losing to its rivals or missing out on sales to customers is a good business. Another stock that Buffett owns which fits this bill is American Express. Via Berkshire Hathaway, Buffett has owned Amex for decades, but in an inflationary world it becomes even more valuable. Why? Pricing power. American Express earns fees based on spending volume, and when inflation makes everything more expensive, their cut of sales scales with it. Plus, it's a brand that people trust in uncertain times. That's the kind of moat that isn't easy to replicate, but it's exactly the kind of business Buffett wants in a world of rising prices. And here's the one most investors overlook. Berkshire also owns BNSF Railway and a sprawling set of regulated utilities. These businesses are basically toll booths. They earn steady, recurring revenue from moving goods and powering homes. When inflation hits, their operating costs rise, yes, but they're also allowed to pass those costs on to consumers. And here's a wild stat. BNSF moves 15% of all freight in the United States. That's not a company, that's critical infrastructure. So what does this mean for your portfolio? How can you take lessons from Buffett and apply them to your own investments? Buffett's not chasing returns. He's building a fortress investment portfolio. And here are the big takeaways. Own businesses, not just tickers. Think like an owner, not a trader. What matters is that the business is doing well. The price per share is what he calls the voting machine. But he says long-term, the market is a weighing machine that values companies based on financial merit, not popularity. Look for pricing power. Can this company raise prices without losing customers? Apple is perhaps the best example of this. Buffett went through a thought experiment in this regard. If you were offered $5,000 to give up your phone forever, would you do it? He speculated that you would not. And moreover, you would pay up to $5,000 just to keep your iPhone. That told him Apple has ample room to increase prices without hurting consumer demand. Another rule is to prefer hard or essential assets. Energy, infrastructure, rail, they're inflation-proof by design. That's why 2 of his top 6 holdings are energy plays. Lastly, avoid the hype. Buffett's best trades never felt exciting in the moment, but they did make sense. Most investors get distracted by noise. Buffett watches cash flows, moats, and economic reality. And when inflation rises, he welcomes it because his portfolio is ready. If you want to see more investments like these, not just from Buffett, but from billionaires like Stanley Druckenmiller, Bill Ackman, Carl Icahn, among others. I break down the top hedge fund moves here at Fade the Herd, so don't forget to hit the subscribe button for much more. Comment below, what's your favorite Buffett holding and why? I'll be replying to every comment. See you on the next one.